Welcome to episode 18 of my Robinhood portfolio, and today the portfolio is up $58. In the after hours, I am up $2, so in total, I am up about $60. We're going to talk about it all, guys. We're going to talk about the market in general, how I feel about the market, what has the market have been doing for these last couple of weeks, and we are just going to dive right into it. So, the thing I want to talk about is I believe last week was not a good week for me. As we can see, we are down $7 for the past week. But again, for me, $7 is no big deal. I expect the market to be very volatile around these earnings reports that are coming out. And it's been kind of trending up. It's been trending down. So we just take a look at the graph here. I'm going down, 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 all the way down. And then we're going to go back up, all the way up to $13,359, and then we spike all the way back down. So last week was not a good week. There's a lot of stuff going on with the tariffs and a lot of stuff in Turkey, all this Turkey news, and it's just funny because we look at the U.S. markets and everybody's freaking out, but today was a good day. Today was a good day. We kind of just bounced back here from the Dow. I think the Dow was up, the Nasdaq was up. I think all the major indices were up. But I'm just gonna really quickly talk about what's been going on for the month. $278. 3 months, I am up $72, and for the year, I believe I'm up some $900. So just quickly talk about what my portfolio has been doing. So we're going to go right here from September 2009. That's when I started. So I'm learning the market. I'm getting hit up and down. I think I bought Alibaba, Twitter, some stocks like that around this time. We go back down. We trend down a little bit, but then we keep going back up. So then again, we get to this little dip right here. And I talked about this before in other videos, what actually happened in this dip. I think what was going on around this time was a lot of people were encouraging me to buy into these cryptocurrency stocks. The crypto craze was hot right now. I think around this time, Bitcoin was spiking up. Bitcoin was just absolutely ridiculous around this time. I think it was headed to about, I want to say 17,000. Or maybe 15,000. It was really spiking up, and a lot of these crypto blockchain stocks they were on fire. Every time a stock announced that they were going to get blockchain, the stock would just jump up. And again, everybody was just going crazy. Everybody was losing their minds. And me being so new to the market, I wanted to make some money. So I started getting into it. I started getting into the craze, and I didn't trade Bitcoin. What I traded was a stock called DPW. I think it was called DPW Holdings now on the Robinhood platform, but that stock did not go too well for me. I think I bought 50 shares. It hit the after hours, and then it just tumbled down from there. So lesson learned. I'm in the trading groups. Everybody's trading these penny stocks, trying to get rich off of them. I'm seeing it, and I want to be rich too. So I'm doing what they're doing, and I lost a good chunk of my portfolio on this dip. So it's crazy like that. Lesson learned. We move on. So I'm going up. We're going up. We're going up. This is when I started really feeling like I was like a genius in the market, and I'm like, wow, I'm an expert now, and I learned my lesson, and blah blah. So then we get to the January 31st, and then all those returns are gone. All those returns are gone. So, I'm like, well, what happened? I was doing so well from December, I think it was around December 6th, all the way to January 31st. So, again, guys, the markets aren't going to go straight up every single day. Like, there's going to be days where there's going to be market corrections. There's going to be days where, not essentially market corrections, but, the market could go through a correction within a month. Period. We don't know. We don't know. Look at that 2008 crash. That 2008 crash lasted for a while. I think it lasted all the way into the beginning of 2009 and on. So so my portfolio went through there. This is when the correction happened. I lost a good chunk of my portfolio. I think I almost lost 10% or 7%. But we're going through a lot of volatility. Market's going down. So we get all the way over here, and then the portfolio spikes up. So what happened in this time frame? Okay, and I'm just going to say that around this time, I was trading options. Around this time, I was trading options. Around this time, and I did a really, really solid trade. And the greater the risk, the greater the reward. So I think I traded what's the stock called again? I forgot. I think it was Nvidia. I think it was Nvidia, and it was a really good trade. I think I made like $500 off that single trade. It was an options trade. It was very risky, but for some reason I had a good feeling that Nvidia was going to go up. It was right at the earnings time when Nvidia was really spiking up. Like that stock went from about $212 all the way to $260. It was crazy. Like I risked it. I just jumped on in and rolled that train up, and so this thing jumped up almost $500. And guys, again, when you start getting success in the market and you start getting pig-headed and you start getting overconfident, you start making mistakes, and that's what happened right here. That's what happened in this little here. So we see how my graph trended all the way up, and then it trended all the way down. So what happened in this little dip right here? What actually happened was I traded Nvidia. I felt good about it. I thought I could learn options. I thought I was an options expert or whatever. And then I traded. I think it was Boeing, but I didn't trade calls. I didn't trade any options on Boeing calls. I think I had a Boeing put, and I don't know why I put a Boeing. I don't know why I did it. It just felt right. Like there was a lot of stuff going on. There was tariffs. There were just a lot of crazy stuff in the news, and I went for it. I said, you know what? I'm going to put this Boeing put in. I feel good about it. Like I got lucky with Nvidia. I spiked up to $500, so let's do that. And that did not turn out so well. So I went from, I think, of $13,415 all the way back down to $12,000. So $12,500. So yeah, guys. I mean, options is very risky. I don't recommend it at all. That's when I really started saying to myself, okay, let's not get overconfident with the market. Let's just continue. You had a good strategy going on from January 6th all the way to January 31st. The correction happened. So what? We know that the markets aren't going to go straight up, but most of this is my fault. I should have quit when I was ahead. I should have just said, okay, yep, I made my $500. Let's go back to my buy and hold strategy. And yeah, guys, I lost. I think I lost. I want to say about $400, $600 off that one Boeing put. And it's funny because I think maybe about a week later or 2 weeks later, they announced tariffs and Boeing went down. And had I held on just a little bit longer, I probably would have saved that money. But the thing is that I panicked. I'm looking at my portfolio. I'm like, whoa! As soon as the market opened, I think I was down almost $500. So, again, you don't trade options if you don't know what you're doing. If you're not, I wouldn't even call it like if you're just a straight expert at trading options. I would not trade options if if you're not doing like the technical analysis about stocks and just looking at stocks and just saying to yourself, okay, I know why this stock is going up because their earnings look good or something that they did is amazing, or they're making potential profit. So lesson learned, and now I'm just holding. I went back to my buying and holding strategy, and it seems to be working out. I do withdraw some money sometimes out of my portfolio. I try not to do it. I know it doesn't look like I do, but I do withdraw money. So, I was up almost, I think almost $1,500, and there's just a lot of things. I withdraw money. I got hit by that Boeing put option. So just a lot of things that made me, say to myself, I'm not, I don't think this is beating the market. I take beating the market if you're up 10% or more, but that's a story for another day. So anyway, let's just jump into my portfolio. I know I've done a lot of talking, and there have been a lot of moves in this portfolio as far as the outlooks of these earnings reports and me doing my research and due diligence. But let's go ahead and jump into it. I think it's about Steel's 10 stocks in here. I think the last video had Southern Company and Boeing Airlines. Those are no longer in my portfolio. Apple's still here. Apple is really been on fire as of late. They have just been spiking up pretty nicely. I've said it before. I thought that this was a $200 stock, and they are proving me right. they're proving me right. They continue to go on. Excuse me. They continue to go up. They continue to beat the market. As far as this nice graph that's just really insane. The stock is almost up 10% the past month. So a total return of $170, which is just insane. It's the biggest position in my portfolio, I believe. I think either this or 3M. 3M is a new addition to my portfolio currently. I added 3M because I just like their diversification among the industrial industry. I had Boeing Airlines, a stock that I really like, but I can't accumulate a lot of shares of Boeing because it's just so expensive. It's almost a $400 stock, and I saw an opportunity with 3M to really pick up some shares. My position is below $200. I think that this stock is a buy below $200. And with an amazing dividend, it's a dividend aristocrat. They've been paying this dividend out for a while now. A solid PE ratio, and they have been increasing their dividends for as far back as I can remember. So I think they have an ex-dividend date coming up, $1.36, I want to say, which is really just fantastic. They have a really, really competitive dividend that a lot of other companies cannot match. They can't compete with this dividend that 3M is giving out to its shareholders. So it's a really solid stock, and it's a stock that's on sale. So this thing was headed to about $300, and now it had almost a 25% correction. I was into the stock earlier. I think I was into the stock around $197. I wish I would have just held on to those shares, but I ended up buying Boeing. I took the money from Boeing and I went back into 3M. This is a safe investment. I think this is a safe investment. I like 3M for what their diversification among the industrial industry. It gives me an industrial stock that is very diversified. I just like them. I do, and they have an ex-dividend date coming up. So I talked about Apple. I talked about 3M. I talked about why I sold Boeing. It's just a very expensive stock that I can't accumulate a lot of shares of. It's a great stock. I like the stock, but there's just a lot of intangibles that's going on with Boeing right now that I don't like. It's expensive, and the tariffs. Every day. Not every day, but every other week or so, this trade war I don't think it's going to, last all that long, but, it's still here right now. Tariffs get announced and stocks go down, so I have to kind of work my portfolio around that. So I thought that 3M was a good pickup, and anytime tariffs are announced, all the industrial stocks are going to fall. So it really doesn't matter. But it seems like Boeing falls the most when tariffs get announced. So that's why 3M is a good investment. It's a dividend aristocrat, and I do like dividends. So Southern Company was replaced with Next Era Energy. The thing with Southern Company is that even though they had a good earnings report, and they really crushed earnings report, they crushed their earnings report, and they had a nice dividend pay. I don't think I captured that dividend, but the thing with Southern Company is the reason why it dipped was because they are amounting a lot of debt with this Vacto nuclear power plant that they're trying to build, and I think they took on an additional $1 billion just to start building. Well, they may be already building the Vacto plant, but they're burning a lot of cash with building these nuclear power plants, and a lot of investors are scared about that. They don't like when companies take on massive debt, and they like companies where they have a fine balance sheet and they're debt free and all this sort of stuff. But Nexter, the reason why I bought Nexter Energy is because it was a stock that I'm familiar with. They do a lot of work on the East Coast, like I said before in my earlier videos, and they're really trying to expand their potential in the solar energy, the solar energy sectors that I really like. I think that solar energy is a staple for futuristic growth. I think that it has a great futuristic pattern on how we are going to do things in the future. So they're going to shut down, I think, all these unhealthy oil plants and factories and all this other stuff, and we're going to start moving towards solar. So solar energy. We're going to start using the sun to capture our energy and all kinds of stuff. I think that technology is just going to expand that way, and I think Nexter Energy is going to be one of the leading companies to do that. So PE ratio is very, very attractive. Only about 9%. Dividend yield 2.52. Market cap looks good. This is becoming a blue chip stock. If not already considered a blue chip stock, they pay a competitive dividend that is being increased. They're increasing this dividend over time, and it's just a stock that I'm familiar with. I like them a lot. And there's the news. They're talking about Southern Company. It's talking about the Vacto power plants that they're building, and they're taking on debt for that. Average cost $169. I was in this stock before at $150, and already I'm up $21. So it's a great stock. It's a great utilities stock that I think Southern and Nexter Energy is one of the best utility stocks on the market to buy if you want a utility stock. Johnson & Johnson has been trending back down, but again, I'm in on a very low average cost, $120 for a total return of $90, and I get the dividends. I get the dividends along with the capital appreciation, so you can't go wrong there. Procter & Gamble, I kind of increased my average cost with this stock only because I bought more shares, but I had to move more shares into 3M. So all I really did was just increase my average cost, which I really don't like because I like to keep my average cost as low as possible. But I'm up $79 with a total. Today's return was really bad, almost minus $5. But the dividends are great. Solid company, solid consumer staple stock. Should have bought this when it was like $71. It was crazy. I did reduce my Verizon shares only because I just don't like buying Verizon at these levels. I think Verizon is a great buy below $50. But yeah, there's Southern Company. Seeking Alpha was talking about Southern Company, but my portfolio diversity is only 3%. So I've really trimmed down Verizon, and I already captured their dividend. I'm going to probably increase my share. I'm waiting for a dip. That's what I'm doing. So if you guys can kind of tell what I'm doing since I trimmed down my Verizon shares. I think I had like 20 shares, but the stock keeps going up. The stock keeps going up, and it's not allowing me to buy low. So I might have to buy this high. I don't want to do it, and I'm probably not going to do it. I want to buy at least for Verizon's case, I want to buy 50 shares. So I can really get a super dividend out of those 50 shares. It's a good stock. They don't have as much depth as AT&T, but I think AT&T has a lot more potential than Verizon with all the deals that they're making, especially the Time Warner deal, which gives them a lot of flexibility, but it increases their debt over the long term. So they have to do something about that because companies with debt is really bad, and even a person with debt, they can tell you that it's like a thorn in your backside. So Walmart, I like Walmart. I think I've said this before in my other videos. I'm in average cost 89.69. I think I had a lower average cost than that because, like again, I've shuffled my money around a lot. I just try to get stuff that I look at that's on sale and has a good dividend. But again, Walmart's kind of been stagnant, so I jumped back in, and they're starting to trend back up. I like Walmart a lot. I like Walmart in a, I would say, in a correction market. Let's just say, for example, the market's in a correction, or if we are in a major pullback happens. I like Walmart because it's cheap. They sell cheap items, and a lot of people can get their stuff for cheap. So they're everywhere. They're all in your face. I just like the company. They pay a really competitive dividend. The PE ratio might be a little bit high, but the market cap looks good. Walmart's not going anywhere. I don't care how big Amazon gets. It's where the big boys are for sure. A lot of the rich are putting their money into Amazon, and Amazon is headed to $2,000. I think I looked at it today. That thing, it's going to $2,000. End of story. But Walmart I think Walmart is not so much undervalued, but it's close. It's really close to being undervalued. They should probably be up more a little bit than $90. Visa's putting in work. I don't have to say much about them. Starbucks. I really like Starbucks. Has been trending back up here, and I talked about them before. It takes nothing to make coffee. A really solid day, $15. A great dividend capture that I did with them, $7. So I get paid $7.20 on April 24th. And I've captured a lot of these dividends. A lot of these stocks are starting to pay dividends now. Apple, their dividends coming, $7. I think Microsoft had an ex-dividend day today. I think ex-dividend. I think their ex-dividend day is tomorrow, but I'm going to capture their dividend. And yeah, guys. I'm just capturing dividends left and right. So, that's pretty much my portfolio in a nutshell. Really solid, diversified portfolio. Everything's here. There's not too much technology in here, but again, that's the most bullish sector that I like is technology. So, I have more of that sector than any other sector. But what I like to do with my portfolio is spread the diversification out a little bit in some of my favorite stocks. I like Apple a lot. I like Microsoft. I like Johnson & Johnson. They're like the Amazon of healthcare. Visa. I might buy Bank of America or JP Morgan. I've been looking at those stocks, but I like bank stocks, but right now I'm not too sure about them with these interest rates going up, and I've just been looking at stuff, and I'm like, I don't know. I don't know if I should get into it now. Just wait for it to dip a little bit more. But I have Visa, and Visa is not a bank stock, but they kind of work around those banks, and it's like a financial tech stock. Everybody has a Visa logo on their card, and they're using Visa. If you're not using Visa, you're using MasterCard or some American Express. But Visa, their Visa is very popular. I use Visa, and I like Visa, so there's not much to say about them. I like this portfolio. I do. There's a lot of stuff going on here, and there's really no weaknesses that I can see other than, there's no energy stocks. But right now, energy, I don't think, this is in my personal opinion, I don't think there's the time for investing in energy stocks is now. I would not do it because commodities are just really volatile, and right now energy stocks are not looking good with all this Turkey mess, tariffs, and just all this other stuff. All the news just pouring into what's going on with these energy stocks. I was looking at one particular energy stock, which is Shell, RD ticker symbol RDS.B. And they have really been on a trend downward. Up from $75 and this stock has been getting hit in the mouth because we're going all the way down to about 65. It's currently $65. So yeah, guys. This is one of the reasons. I mean, look, this is the reason why I don't like oil stocks, because they're extremely volatile. We don't know what they're going to do. They are commodities, and June 2014, we are going all the way down. This is when oil was getting hit really bad, and oil was just facing a massive correction, a total correction of about 33%. That's almost 50%. A 50% correction in 2015, and I know that there was a mini correction back in 2015, around that 2015-2016 mark. All the stocks just really got hit, but the sector that got hit bad the most was definitely energy. I mean, this thing was $66. We're talking about all the way down to $32. So if you bought the stock right here, you are sitting golden right now, because you get a dividend yield of about 5%, which is really good. I think they pay about 94-cent dividend. But if the stock would ever get down to this point again, I would just buy this up immediately with just so many shares. And oil's been getting hit really bad. So I'm watching these oil stocks. I'm waiting for the right opportunity to buy these oil stocks, and I just look at stuff and I say, okay, when is the time? When is a good time to buy? I want to buy low and I want to sell high, but sometimes I ended up buying high and sometimes I ended up selling low. So I'm not perfect. I'm not a perfect trader by any means, but I'm still learning. I'm still learning not to pull the trigger on some of these stocks yet. I love buying and holding, and I'm not too much into the Bitcoin craze like I was back in 2017, but I have a goal. I have a goal, and the goal is to push this portfolio up to $20,000. So I have a goal, and I'm out to do that. And I don't know if I'm going to reach $20,000, but it's very realistic if I work hard and make the right trades. So I don't know, guys. That's going to do it. Comment, rate, whatever. This is my portfolio again in the next show. 3M, Visa, Starbucks, Walmart, Verizon, Procter & Gamble, Johnson & Johnson, NextEra Energy, Microsoft, and Apple. That's going to wrap it up for me, guys, and I'll see you next time.